Good morning and welcome to the market forecast. Today is Thursday, May the 20th. I'm John Hoagland. Thank you for trusting me with your time. As always, we're going to be looking at these markets, hoping to find a consistent and accurate context, good risk management, and as always, exercising patience. This morning, as far as economic numbers came out, 7:30 this morning, the jobless claims numbers came out, and a little bit of a mixed bag there. The initial jobless claims came out lower than expected, which is good, but there was a revision from last week's, and the continuing jobless claims came out pretty much higher than last week's, but there was a reduction in last week's numbers. So a little bit of a mixed bag there. A knee-jerk reaction, I think, in our equities markets was to the upside. So overall, I think that's being viewed as a positive. We also had Philly Fed, which came out lower than expected, but still indicating continued growth in manufacturing in the Philadelphia area. So we also have leading indicators at 9 o'clock this morning Central Time. And, of course, the nat gas storage numbers due out at 9:30. Nat gas traders, be ready. Tomorrow is rollover for nat gas. So watch your volumes. Watch when the volume rolls into the next month and then move into that next month. As far as news is concerned, just kind of glazing over some of the information coming out this morning. Inflation fears seem to be continuing to have investors a little bit on guard as stellar retail earnings continue. Kohl's, Ross Stores, Ralph Lauren add to the nice list after Home Depot, Walmart, and Lowe's earlier this week all had very, very good earnings. A lot of that is likely to be aided by the government stimulus checks that have gone out. We'll have to see how that continues to play out. U.S. stocks are set to open mixed to higher now after those numbers came out. Jobless claims and Philly Fed viewed as positives. Cryptocurrencies continuing to have some difficulties under some pressure again last night and this morning. Crude prices remain soft after the Iranian president claims breakthroughs on lifting sanctions and a new agreement in the Paris Accord. There's no comment yet from the U.S., but it's got crude off a little bit here. We've just opened. Looks like we're leaving the opening range at the high of the session. We're going to look at those charts very shortly. The VIX about steady, 22.10. Dollar index a little bit lower at 89.98, and the 10-year yield a little bit lower this morning at 1.65. Pretty much holding pretty close to that level. As always, make sure you like, share, comment, question, feedback. And heckling at will is always welcome. Make sure you subscribe to our YouTube channel so you can get notifications when we do go live. Always want to say good morning to everybody. Good morning, Brian. First one in the room. You win the prize. Theo, it's good to see you this morning. I'm looking forward to seeing some good things for you today. Good morning, my brother Rick, Ed Nelson, Felix, the infamous Felix Escobar. It's good to see you, sir. Ed S., John S. When is the next group mentor session? I'm going to put it in the chat right now. It'll be at the bottom. And that is, again, next Wednesday at 1 p.m. Central. I'll look forward to seeing you there, John. Cesar, good to see you. Vici, good morning. Richie, good morning. Feels like it should be a Friday. I'm all for that. Greg, I feel a big day unfolding. Greg, you were talking yesterday a little bit about, I think you were mentioning something in gold and maybe being a little bit maybe to the overbought perhaps. Maybe something we're going to be looking at here this morning. Tim G, Jim Wolf, good to see you. Trading Research. Andres, Danny Ireland, good to see you. Mr. Shine's Mystery Channel. Brad Generous, good morning. Good morning, George Z. It's a weird market. There's always something in the markets that just kind of makes us question our hypotheses or our strategies. Trade those hypotheses and strategies. If they pay, you're going to be in good shape. Shady Trader, good morning. Good to see you again. Took a long needed break from the market, Shady. We all do that from time to time. I was off all last week, and I really tried to separate myself from the markets. I kept one eye once in a while. I'd check and see what was going on, but I didn't have any activity. I just rested up and ready and raring to go now. So we're going to try and remember to stay patient as we get back into this. Prophet Eon, good morning. Keith, good morning. The chef, Mr. Magianis, is here. Vince, good to see you this morning. Jason, 8-Ball, good to see you. Colin, Jorg, 8-Ball, new combine rule actually helping with my trading. Good, good. What that was never meant to do was to harm. Absolutely. Andrew Hennessy, good morning. Vince, happened to me this morning on the opening range, got stopped out. All right, well, that does happen from time to time. Opening ranges are somewhat contextual, somewhat streaky. A lot of folks look at those opening range trades, and sometimes if too many of them are exercising or working that opening range trade, sometimes they just come and take you out with a stop, and then they play out without you. We're going to be talking about that a lot, Vince. So you're going to get a better idea of what context to really try and work that opening range. And good morning, Josiah and Nico. All right, let's jump into the charts here. I've got lots of notes for us here this morning. Lots of opportunities with late spikes lately. We're going to take a look at all of those right now. Let's get over to the charts. This is the 30-minute in crude oil. I'm going to just shoot over to the to the daily chart here briefly. See what we're looking at. Okay. Rumors of an Iran deal that are unsubstantiated here in the U.S. Has softened prices just a little bit. Well, we had a pretty big day in volume on this move to the downside, a close below weekly kickoff low, and losing 18,000 in open interest. Some longs coming out of this market, not necessarily barreling into shorts here just yet, but a little bit of fear of potential flooding of the oil market, if you will. If this deal with Iran does come through. We don't have any evidence of it, at least I don't just yet. It's going to be it's going to take something from the U.S. to verify that. I'm going to be focusing on selling strength this morning if I get the opportunity. We've got a little bit of a market state break in this trend line, which was 1, 2, 3, 4, 5, 6 contact points. We broke out below it. We closed below weekly kickoff low. We're working on last week's low as we speak. So I'm thinking that if there's going to be a market state break, we're going to either begin to range down in this area or see some more momentum to the downside. So I'm going to be looking for opportunities to sell strength. If I do find opportunities for longs, I'm going to be very reasonable with my profit targets on those. Those aren't going to be ones I'm going to marry all day. If I get good reward over risk on any longs, I'm just going to be happy with those. My focus, I think, for now will be more looking for opportunities to sell strength. Looking at the 30-minute chart, So yesterday's opening range was the high of the regular trading hour session. We had a lot of shorts in this market that continued to get paid. They brought price back right to the weekly kickoff low here. We did settle below it. Settlement 63.35. 63.50 is the weekly kickoff low. So this is an area where we're thinking longer time frame traders may need to adjust their inventory. We had some overnight shorts in the market. I believe those have now been reconciled before the open. If the opening range is the high of the regular trading hour session, this is something I'll pay attention to. The areas of strength that I will look to trade against will be structural in the daytime frame or settlement, or even better, would be weekly kickoff low. We broke down below it. We've been having trouble holding above it. So that would be an interesting area for me. The market, since it has broken down below that weekly kickoff low, it's really struggled to hold any price, time, volume up above that level. So looking for opportunities to sell strength is kind of on my radar today. Last week's low, obviously, having trouble holding inside last week's low right now. So we are, however, inside value from yesterday, which, Vince, this is one of the things that I look at. If we're inside value, I'm a little bit more cautious on getting into the opening range trade because the market has really not proven that there's any major changes in the perception of the value of a barrel of crude oil. We're right in the range from yesterday. Okay, so when I see that, I'm a little bit more cautious to try and get into the opening range trade, particularly if the opening range is exceedingly large. If it's a 20-tick opening range, probably going to be very cautious into getting into that. So just a little bit of info for you. Inside the opening range, try and stay patient. I'll be looking for opportunities to sell strength as the day goes on. The E-mini S&Ps. All right. Fascinating situation that we have here in the E-mini S&Ps, as always. Something weird, something unusual, and something peculiar, if you will. We added 24,000 in open interest on high volume on a nice push to the downside, unable to accept below weekly kickoff low. The market came back and basically, rejected this area down here. Is it going to continue to reject? Only the markets will know. The open interest that increased yesterday tells me, there's some new energy coming into this market. Again, and we're rejecting below weekly kickoff low. Is that going to push us back higher? Now, we also have on the 30-minute chart, no real overnight inventory. Okay, here we are. We have just closed the gap between Tuesday and Wednesday as we continue to try and push higher. We also have the late spike that we put in on Tuesday. When we open below or inside the late spike, it's indicative of acceptance of lower pricing. This area up here, I'm going to go with 41, where was the number I put down? 41.34 as the base of the late spike. I'm going to be looking for some possible resistance at the base of this late spike from Tuesday. We've closed the gap. We got a little bit of a movement higher here, but I'm going to be looking to see if maybe there's an opportunity for me to get an execution at the base of the late spike from Tuesday. We've opened below it. We've stayed below it. We haven't even gotten into the late spike, and this may offer us an opportunity. So as far as, anything else going on this morning, it looks like we're going to be opening with a gap to the upside. If we can't close that gap relatively early, that may negate the late spike from Tuesday, and we could see this market move higher. There's plenty of visuals to look for, including the point of control from Tuesday or value high from Tuesday. So we're going to be opening out of range and out of balance. Vince, this is a situation where I might be more likely an opportunity to look for an opening range trade. Now, Tim's asking, would you call yesterday's end of day action a late spike as well? Look at the TPO chart here. Okay. Okay. So here's the action from yesterday. If this is a late spike, it's not real strong. Now, The fact that that price opened, settlement settled at 41.1150 tells me, does this look like a late spike? It kind of does, and kind of doesn't. It looks as though this area up here, these three NTPOs near the end of the session, were acting more as excess at the high than a continuation and a close all the way up here. If it had closed up a little bit higher and at the high of N period, I would say that looks, more like a late spike back to the upside. Okay, so when we're looking at these now, there's always, the possibility. Here's the base of the late spike from Tuesday, 41.34 approximately. Thinking about what I was going to be looking at this morning, last night. Okay, at the end of the day, I'm thinking, okay, what's going to happen? What are we looking at if we open in this area? Okay, this is kind of an area of excess. The market has not necessarily spent a lot of time here recently, so this gives us kind of an area where we may want to go and recheck up to the base of the late spike. But what if we go into repair? If we go into repair, where this would be kind of considered a 2-day double distribution, then that puts us up to point of control in the upper distribution and point of control here in the lower distribution. So there's a number of different scenarios that I'm focusing on this morning. Is the late spike going to hold? If the late spike is going to hold, I'm going to look for this market to continue to rotate lower. If it does not hold, then I'll look for an opportunity up near point of control for the market to come check this area and then return lower to recheck the point of control from yesterday. This would be an area of repair. And the fact that, would I call yesterday's close a late spike? Not necessarily, but look where we're opening. We're opening in the hole that was left between Tuesday and Wednesday. So there's a number of different scenarios. A hypothesis one, we get an opportunity to see the late spike from Tuesday and we see price reject from there. We don't see that. We see the market continue to move a little bit higher. The next opportunity is the point of control from Tuesday for a possible repair day that would bring us all the way back down here. Now that's a pretty substantial move. But it's the focus, it's the focal points that traders bring the price to, and points of control are big focal points. And when traders look at those, they tend to make price go there. John S., all I do is go over here and add a module, and I can drag on the chart, not the legacy chart. I can drag this and I can add it to my S&P tabs here. I go ES. Let's go ES. Select. Now it's automatically going to go to TPO for me because that's what it's done in the past. So, but if it doesn't, go to trade type, chart type, and go down and click TPO. Now there's some adjustments that you're going to have to make, and you'll find those here. Configure chart elements, time, colors, all of the things that you're going to want to add. And I don't have time to do that now, but that is where to find the TPO charts. Okay. Yes, go to candlesticks, then choose TPO, but you got to use the new charts, not the legacy charts. All right, so on the S&Ps, have we talked about everything here? I know that there's a lot to focus on here and lots of different hypotheses. So what I'm going to be doing is I'm going to be waiting for one of those hypotheses to present an opportunity for me, and I'm going to react on that strategy. And if it doesn't play out, I know I can limit my risk at the base of the late spike here. I'll wait for if that doesn't work, then that hypothesis is over. I'll wait and see if we see the next hypothesis, which would be points of control from yesterday and Tuesday. Okay. You bet. All right, let's take a look at the Nasdaq now. Getting a little long-winded. I apologize. All right, Tim, that was a really good question. I was pondering that earlier. Thank you for asking that. Yep. All right, Nasdaq. This trend line there. Now it's in the right spot. This trend line has been supportive in the past. It goes way back, so this is a pretty strong trend line. Volume and open interest boost change is possibly coming. We had a big volume on that push to the downside and the ensuing push back. We added 2,500 in open interest, so there is more energy coming into this market. But still, the central location between weekly kickoff high and low and last week's high and low indicates, potential continuation of short time frame control. Well, short time frame control means we're looking for short time frame levels. Look at where the market is right now, okay? This morning earlier, this is the base of the late spike from Tuesday. The market had already come back and tested to the base of the late spike. We are now heading higher. Does this mean this is what's going to happen in the S&Ps? Well, we don't know. We haven't seen the base of the late spike yet. Okay, so now what we're doing is, are we going to be opening back in range, or are we going to open back in value, or are we going to open above the late spike? That may indicate, this is going to negate the late spike in the Nasdaq, not necessarily the S&Ps. We got to trade what we're looking at in each market. They are similar but different. And if we can get back inside of value, then maybe we move to the high of value. Perhaps this could just be a move up to point of control from yesterday and another return back to point of control from, this is Tuesday, this is yesterday. So are we going to repair? Did we already repair? Because we did close the gap yesterday, and we basically traded to the base of the late spike at the end of the day yesterday. This is a pivotal area. The market kind of liking what it's seen so far. This hypothesis may be more like, see what happens up at this point of control. Limit your risk there. If it holds and rejects, you may be able to hold that all the way back down to yesterday's point of control. Gold. Gold has been a very interesting and profitable week, hopefully for everybody. We had conversation yesterday about maybe we're getting a little bit too long for a continuation. Any hint of increases in, inflation could change the game very quickly with this. Big volume and open interest change yesterday, added 10,000, perhaps new longs, because it was really kind of a two-sided auction day yesterday. So we probably added longs and shorts, new positions. Very difficult to know what the direction of the open interest was yesterday. The fact that we're kind of holding in pin bars here indicates potentially slowing of momentum to the upside. It would not surprise me for us to not be able to hold above weekly kickoff high, particularly without any new information regarding inflation, and for us to balance here for a little while or pull back a little bit. Would love to see the opportunity to see last week's high as an opportunity for me to look for an execution, but I don't know if I'm going to get that. Those pin bars are a little bit deceiving, however, because the market did close higher yesterday. Pin bar here, okay? Settlement, that's a pin bar. The market did end up closing back down here, so it looks like the settlement would be another pin bar, but it did close higher. We don't have any overnight inventory here. Even though settlement is up here, this was the end of the day yesterday. Would you can't even call this a late spike. You can just call this a return to balance. And we have been balancing ever since. So this morning it has been kind of off my radar for gold because I don't see that there's any really great opportunities where we are. We're in range, we're below value, but I'm not near the overnight low. I'm not seeing anything great here. Nothing fantastic in the volume profile. Nothing great in the market profile. I'm basically kind of holding off. I think that there's opportunity coming. There's been some pretty decent opportunity in gold this week. Right now, not seeing it. Not getting involved. Watching to see if something else offers itself through the day. So that settlement price is deceptively high, or this pin bar that was established when the market finished the day down here is the deception. Which one is it? Are you watching for acceptance or rejection of yesterday's area of value? That's hypothesis one. If we get back in value and we accept, we may continue this move to the upside to test high of value. We've got a big barrier to get there in settlement and weekly kickoff high at 1882. All right, let's go take a quick look here at the euro and the 10-year open interest and a little bit of higher volume. We lost 3,600 in open interest. This is long liquidation, not new shorts coming in on higher volume. This was long liquidation. Long liquidation takes selling power away from the market. Short time frame upside structure remains. We had the upside structure, it broke. We've got a new sense of upside structure already here. Accepting above last week's high, I think could push us feasibly to a true test of weekly kickoff high, which is 122.70. The 30-minute chart. Initially, the opening range was left at the high of the regular trading hour session. We are holding longs here that are continuing to hold pat and continuing to get paid to the upside. This is what we're talking about. If we can hold above here, weekly kickoff high is not out of the question. Okay? We just took out the opening range high. Buyers still holding pat. We bring in new buyers here if that's the case. Value high, weekly kickoff high. Entirely possible. The 10-year. Good volume and open interest increase, about 115,000 contracts added yesterday. But again, we're getting into rollover here. We've got a really rangy market here. Markets tend to stay range bound when they are coming into rollover. So bets on higher yields, perhaps, on this push to the downside. We're holding pat for now. Balance indicates continued short time frame control, even with that big boost in open interest, which may be more rollover related than directional. Big range yesterday. We haven't seen a range like this in the 10 years for quite some time. Settlement is down here, 132 and 10/30 seconds. Lots of overnight longs here, struggling to perhaps reaccept inside value from yesterday. Does give us an opportunity. Kind of a weak high in the overnight here. I'd be cautious about that. But again, this is another late spike. Here's where we opened. We traded higher. We pushed lower and closed down there at the end of the session. Where is this high? It's at the base of the late spike, or relatively close to it. This is a very interesting opportunity, or an interesting level to look for an execution. If we can't get inside value, which would put us above the late spike, then we'll look for the market to unwind the overnight longs that'll take us back down to settlement, or could even be lower than that. If we have acceptance of value above the late spike from yesterday, that could bring us again back into value and an opportunity to get to point of control or value high from yesterday. So our overnight high and our regular trading hour session high, target rich environment. If I have to say it, I think there's fish here. We throw a lure in, see if we can catch them, but always manage your risk. All right. I've gone a little bit long here. My apologies. We are going to take our deep breath. We are going to have a good trading day. Manage your risk, small risks and big opportunities, asymmetric opportunities. Take your deep breath. Stay humble, grateful, and creative in your trading today. Get out there and profit. We should see Dan for the market recap today. It'd be good to see our good friend Dan. Trade well, everyone, and we'll see you later.